Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are. Yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone. Yes, I'm holding on the line. Hey! I don't know where they are. I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are. Yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone. Yes, I'm holding on the line. Hey! I don't know where they are. I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst.
Okay, tell me that isn't a really cool song, and it's free. Okay, StubHub. Why StubHub? That's the word I was thinking of. StubHub. First off, can you guys hear me? Let me know. Give me a thumbs up if you can hear me. StubHub. You ever see that commercial where the guy or they're sitting in the bleachers and they're like, "How much did you pay for your ticket?" And they're like, "Oh, I paid." And it's like, "Holy moly, I way overpaid." Comes to mind today. I had a young man I was calling. We were going back and forth with the conversation. And he's like, "Well, my friend just built a house, and here's the rate he got. Why?" And I was like, "Well, we'll go through some things." So today I'm going to actually kind of give you show you behind the curtains on how we do what we do. So we have this slogan: one application, one credit pool. We're going to compare your loan to over 30 different lenders. That's the best way to put it. So how did people do it in the past? Okay, so here's what you do. Here's the complicated part of this. What's the rates? Okay, hey, thanks for the thumbs up. If you guys can hear me, please just give me a thumbs up. I just got a new whole computer system. Hopefully it looks a little bit better and hopefully it sounds a little bit better. So I'm not basically do want to make sure that you guys can hear me. So here's rates. Okay, but here's the frustrating thing. That's the rate there on Mortgage News Daily. Then you go over to here and here's another one. I'll just prove it to you. It's today's rates, 4-minute read down through here. The rate on this conventional loan is 6.32. The rate on this is 6.17. This one is, and I had to double check this one. Look at this. October 22nd. I had to double check my watch. You scroll down. Here's what they're saying rates are. I don't know if you guys can see 7.43. It's haven't been 7.43 for like 2 years. So that's the confusion. So let's go back. Here's how people used to do it. And let me know if this is how you did it. If you're a home owner right now, let me know if this was what it sounded like. So you go to some of these sites like this. Okay, so then you scroll down. It's like, I don't know what to do. Well, okay. Well, this one's good. The Rocket's good, and Loan Depot. Everybody uses these guys. Then you go here. So what do you do? Well, you click this one, and then you have to put in your application. Then they'll pull your credit, and then they'll say you're approved. Okay, well, just so you know that if they approved you, they're going to approve you, and they're going to approve you, and they're going to approve you. Okay, but then you go here, and you're going to get the same thing. So this will take a day or two to do that. Then you're going to go here. You're going to get all these quotes because you were told to get 4 or 5 different quotes, right? Well, what happens is they all approve you. Then this one gives you this rate, and this one, you get my point. So I made a better system. Okay, that's what I want to show you today. So let's get over to it. Here's my website. So if you're out there and you're a homeowner, I'd love for you to sign up for this system right through here. This is a RateWatch tool. So if you're watching this and you're like, okay, I don't like my rate. Maybe you have a great rate. Maybe you got that rate and you shopped around or you got a builder credit and you used it to buy it down. But let's get over here for homeowners. Just click this button right through here. What you're going to do is just tell me give me the information about your home. And then what rate would you want us to reach out to you and at least go through the numbers? And what we'll do is it's pretty simple. We're going to go through what the new payment's going to be, what the costs are going to be. The costs are the big thing when it comes to refinance, especially when we're in this stage. Are they going to go a little bit lower? Are they going to get a little bit higher? Join me tomorrow live event. I'm going to answer that number one question. When are rates going to get back into the 4% range? Hopefully you'll be a little bit surprised. So if you're a homeowner, check that out. If you're a home buyer, we got a tool right through here to give you up to $7,000 in down payment assistance. But let's get over to what we do. Here's what I do. Okay, so I'll walk you through the process just so you understand real quick. So what happens when you reach out to a lender and you put in your application? We review that, and then what we have to do is we have to pull your credit. Now, there's Vantage credit scores, and there's other credit scores. Let me just see if you guys are paying attention. FICO credit scores. Are those allowed to be used now when it comes to your mortgage, or are they going to switch over to Vantage? Let me know if you guys think it's a FICO. Give me FICO or Vantage. Let me know what you guys think. But what am I trying to thought? Let's get over to here's what I do for a living. Okay, so let's just dive into it. We're going to show you how we shop your loan with over 30 different lenders. Where I was if a lender got you approved, most likely anybody can get you approved. But what we want to make sure is a few things. One, are you in the right program? A lot of times people just go with a conventional loan because they're like, okay, because FHA, that's for people with bad credit. I don't have bad credit, and I don't want to tell people I have an FHA loan. Folks, I would love an FHA loan. If my credit scores were, under 700, I wasn't putting down a ton of money on my house. Many times FHA is the one that really pans out for a lot of people. And then it's really easy to refinance. But we want to make sure you're in the right program. here's another trick that a lot of companies don't do is your income plays a huge role in this. And I'm going to show you in the description. So let's get over to it. If you guys have some examples you want me to run for you, that's hopefully why you're here. And I only have one thumbs up. Come on, folks. Give me a thumbs up. I at least need to know if you're here. If you can't hear me, that's why I'm not getting thumbs up. So if you could just do me a quick little favor, just give me a thumbs up if you can hear me. Let's get over to some scenarios. Here's a common scenario we have right now. A lot of people are looking to refinance, but they're like, okay, well, I'm going to wait for rates to get lower than they are now. Well, yeah, can they get there? Yeah. But let's just see if it makes sense right now. Okay, so let's run through a scenario. I'm going to go through maybe 3 or 4 different scenarios for you guys. And the reason is I want to capture all these products, because if you have a conventional loan, there's a little trick I'm going to show you. If you have an FHA loan or a VA loan, there's a really nice trick I'm going to show you where it's really easy to qualify, and we can probably get you through our system within like 10 days. So let's get over to it. The first thing I want to go through is what a loan or what a rate would look like if somebody's looking to refinance. Okay, so a lot of people are sitting on the sidelines. They're like, okay, I know rates are going to get in the 5s. You might be surprised. Your rate might be in the 5% today. Let's get over to it. So here's a conventional loan. I'm going to run a scenario of, I'm not going to get any names. And if you're out there and this is your scenario, don't give a thumbs up. I don't want you to give yourself away. But let's go through a scenario that I have. I have it's 443, 1, 2, 3, and they're at a 90. I think they were 92 LTV. Okay, so this is a person looking to refinance. This might be your scenario. If not, well, let's get over to Josh. Josh, you just popped on the board. So, buddy, thanks for joining us. Let's get over to your scenario. What do we have? Purchase 710 for first-time home buyer, 35,000 down. Josh, do me a favor. I'm going to post this up here. If you could post in that data. So, if you guys want me to run your quote, just that's the information I need. Every piece of that puzzle is important. Let me give you one little trick. That part that says down through there, where is it? Where is it? It is not on there. Okay. One of the biggest questions that most people or most mortgage advisors fail to do, ask you your income. Okay, I'm going to show you. Let's go through a scenario right now. Josh, while we're waiting on you to post that data, if you would, post all that information for me, if you would, bud, and I'll come right back. Let me show you how it makes a difference. Okay, so this one I'm going to go through a rate and term. Hopefully you can see that on my screen. It's a $443,000 loan. Let's just make this pretty simple. What did I just do? I don't know what I just did. Let's see. Okay, we're gonna make it simple. Let's just go 85% loan to value. Where did my whole screen go? I might have to reset this whole thing. Hold on 1 second for me, folks. Let me refresh this. I don't know what I did. There we go. Hopefully you can see that on my screen. So let's go down through. This is a conventional loan. It's going to be a refinance, just rate and term. Now there's 2 types of refinances, and I'll give you the tricks on this one too. You can refinance, and can you see under there? Let me see if I can blow it up a little bit. Blow it up. Okay. See right there, there's options. Okay. It says purchase, rate and term, and then refi cash out. Okay, rate and term means all I want to do is just refinance my current balance. That's it. I just want to lower, maybe might shorten my term. We have people look at the 20-year term if you call in. The 20-year term right now is trading equal to, or in some cases a little bit better than the 15-year. Don't ask me why, but when you're getting quotes from us, please let them know that you want a 20-year quote, because if you're going from like 7 or close to 7 down to a 20-year term and that's coming in the 5s, a lot of people, they're having the same payment. And it's like, okay, you just cut off how many years? So, check that out. But so there's the options. When you go to a cash out refinance, that means you want money back. You want to pay off some bills. You want to, pay off some student loan debt or things like that. So there is two different variables there. But we're just going to go, most people right now, I just want housing relief because I want to marry that rate now. Okay, so we're going to say this one is the house value is $450,000. I'm just going to make it simple and go 85% loan to value. And Josh, don't forget about us, buddy. I need your data. All right, so then we're going to go up through here, and I'm going to put in this person's credit score. We're going to go 780 credit score. I'm just going to give you a whole bunch of options. We're not going to really do much more than that. Okay, we're going to go over here. That's a primary residency. We need a zip code, so I'm going to put in 60623. That'd be here in Chicago. and really nothing else. It is a primary residency, single family home, nothing really there. Okay, so let's go here. So this is where rates would be right now. Okay, so this one is, oh, I got to make an adjustment. Hold on 1 second. There is way too many. I have every bank in the whole country in there. There's only the ones that we deal with, so I got to take that out. So there is 27 there, and then we have other databases that bring in about 30, I think about 35 lenders right now that we have. This has the majority of them. So here's what it's doing. So here's what's going on behind the scenes. What this system's doing is now running every bank that we can work with. It's running their rates. You'll work with me or Alan or Tony or Dawn during this whole process. It doesn't matter if you go to our bank or one of the ones we get you associated with. We're going to be your point person. Okay. And that's how you go to the rate update. Just reach out to us. If you go here, again, you can put in that information if you're looking for us to watch your rate, but here's all the information too. You can give us a call, ask me a question. If you just click the button and it'll come right to me, and I'll get back with you within probably hours. You can put in your application. We really don't want you to do that. We rather schedule a consultation. We want to know about you, and you probably want to know a little bit more about us as well. Okay, so let's go back to the search engine. So here's what it's saying. It's saying right now we can get you 6.375 with this one, no lender fees, no points, no anything on that. And so that's what it does. And then it lists all these lenders. Look at all the lenders there. Okay, so that's what it does. So in the past, you would have to go here and then apply here and apply here and apply here. So then here's what the problem is. They all come back with you and they lock you in, or one locks you in. Then what? Okay, then it's so confusing, because the next day this one's going to call you back and say, well, we got a lower rate. So you're chasing your tail. Let us handle the whole thing. That's basically how it works. So let's get over to some examples that we have. Let's go. Josh, did you get back with me, my buddy? Not yet. Let's see. I think we have a full question here. Let's go back, and I am going to refresh this thing. Let's go back to square one. I think I got this way too blown up. Sorry about that, folks. All right, let's see what we got. All right, we have a 30-year, 515, 20% down, 844. Okay, let's start with the 844. Oh, you know what? Don't let me forget to put in that income, because I want to show you there's programs. I mean, you could get probably 3/8 or 0.5% off just because of your income. And what that is easy way to find it is just Google area median income, or Fannie Mae's area median income. What's going to happen is it's going to pull up a map, put in your zip code, it'll pop it up, and it'll tell you, it'll even say home, you're looking for home ready or home possible. Okay, if you're 80% or below, it'll say you could make $85,000. If you make less than $85,000, you'll get a break on your rate. So these are just things we're trying to help you through, because a lot of loan officers miss it. They just fly through this, and like I just did, I didn't put in their income. If you put it in, there's big changes. Okay, so remember that when you guys are posting up here, let me know your income so we can make sure we get you an accurate quote. So a 30-year, $515,000 loan. And we have an appraisal value. You're looking at 20% down, so we're looking at 80% loan to value. Let's see what else we have. An 844 credit score. And if you could give me, Pedro, if you can remember, I need your zip code if you can. I don't think yours will be an issue on some of these. Bluff on those so those don't come in. I'll just put in the Chicago zip code for that. But I need two things from you, if you would. I need your income and your gross monthly income. So your income before all the taxes and all that get taken out. Okay, 120,000. God bless you, brother. Let's get over to this. So I'm going to put in there. So you make $10,000 a month. Okay, so we got that. Everything else is there. Good. You need to make sure these are accurate too. Primary residency. Is it a single family? Is it a condo? We had a client that we were working on 2 weeks ago on here. And then when it came to, when we called afterwards, he's like, oh, I forgot to tell you, it's a condo. I was like, oh man. So it does make every one of these things can affect your mortgage rate. Okay. So let's see. We got 89084. Let's see what that is, my friend. 89084. Nevada. All right, so that we got your data in. Let's see what we get. So what this is doing now is it's scanning all the lenders. These are banks, credit unions, just mortgage companies that we're set up with that we can we can get you loans through. So I work at a bank, and that gives me a license in all 50 states as well as Puerto Rico. But we're also associated with, basically, here, I got to take this out again, modify the search. It's pulling in every lender in the entire country. And we're working on that, but we're not there yet. Okay, so what it's doing is pulling data out from 27 different lenders. So again, it's like you filling out these 27 times and then trying to figure out and get back with each one of them, figuring out who's got the best rate and what time should you lock, when should you lock, what happens if you blow your locks. We can make it really simple. So let's go back. So this is what the rate is. Okay, so now let's look at a rate stack. This is called a rate stack. So now people are saying, okay, how much would it be for me to buy down the rate? Okay, so here's how it works. So you could get a rate at 5.625, and you're actually going to get a credit back of $936. If you want to buy the rate down, then this one gets pretty expensive. If you want to go down to 5.25, it costs you $5,700. That's how that works. If it's in the red, here, let me blow that up. So because probably a lot of you are on maybe phones. The red means that's how much you would have to pay. Okay, the green would be a credit you're getting back. So let's say, for example, I don't know, you just like, okay, can you raise my rate a little bit? Because I don't really want to bring any money to closing. We can do that. Let's say you're $3,000 short for closing, just for some reason. We can go and say, okay, well, we can raise your rate to 5.75 and give you a credit back of $2,480, meaning you only have to come in with what, 520? That might work. So that's how that works. Okay, so that just gives you an idea of where that is. Now let's go back to this briefly, and I just want to see, Pedro, let's change your income. So what are we at right now? That is 5.625 is what that said, right? 5.625. Okay. So now let's go in here, and that's 10,000 in income. Let's say it's 5,000. Let's see. I don't know how it's going to come out, but let's just see how this works out. So it should come up with a home ready or home possible program for us. So let's see how it pops up. And now it is saying down through here, primary. I don't know why it's not coming up with those. It should be. Let's see. Maybe that one didn't trigger in that area. We'll have to try another one. Hold on. Let's purchase. That might still be too much for your area. Let's do another example. Let's try $3,000. I don't know what that zip code is. Well, I know what it is showing on the board, but let's see how that goes. But I just want to give you an idea on how this works. It isn't coming back for some reason. The system should find that you're eligible for Fannie and Freddie, what they're called home possible programs. Now, what those do is those take out any adjustments because of like credit score. So let's say, for example, here's the biggest pieces of the puzzle when it comes to qualifying for a mortgage is this: your credit scores and what's called your loan to value. Okay, you have to debt ratio, which, to qualify for a loan. What debt ratio means, if you ever have your loan officer say, you didn't debt ratio, here's what it means. You don't budget. Okay, so that's one piece of the puzzle I really can't help with unless we try to do a bill consolidation. But the biggest piece of the puzzle, again, they're your credit scores and your loan to value. Loan to value is your loan amount divided by the value of the home. So I created a site not too long ago, a few years ago. If you need some help with your credit, a lot of times if you go out there for some help, it's expensive. So go to the system. I built this thing. There's some things in here that are interesting. You probably are going to, hopefully you learn something, but it's going to give you some tools that I use. Like this one. This is a free credit scoring system. It's either going to launch you the Credit Sesame or Credit Karma. Sign up for them. It's free. Don't sign up for any of the bells and whistles. Just use the free system. It's great. If you need some help with, what your credit scores are, True Credit, this is a fantastic system to use. So that's it for that. If you need some help with that, but let's go back over to here. Did anybody else have any other questions when it comes to this? So let me go through a couple of different scenarios. Here's a big thing is what's happening right now. We're contacting people that we've closed loans with in the past that have FHA loans. So if you have an FHA loan, please listen up. Same thing with VA. Now, conventional, let's put you guys on the side just for a second. The FHA and VA, we need to talk to you guys. The process, we have what's called an FHA streamline and a VA, what's called an IRRL, IRRRL. Don't ask me what it stands for, but they're really pretty simple. What we're going to do is we're going to pull your credit. As long as you haven't missed a payment in the past year, you can have one times you could be late over 6 months ago, but you can't have any other lates throughout the year. And you have a 620 credit score, you should qualify, because we don't need an appraisal. So the value is irrelevant, and we don't need to re-verify your income. That's the guidelines, because what it is they're saying, okay, you've paid now, you're going to pay in the future. So if we can drop your rate and drop your payments, it'll even make it more affordable for you. So why wouldn't you be able to make your payments? So that can be done with VA and FHA. So if you're a VA client out there as well, don't forget about those benefits. Okay, so if you're a conventional loan holder, there might be things that you might be able to take advantage of. Here's what's happening with a lot of people. They're paying PMI. Look at your mortgage statement when you get home, or soon. How much are you paying in PMI? Okay, what you might be able to do now, because a lot of parts of the country, believe it or not, had appreciation, and you might have taken out your loan a year or two ago. See if maybe your value is high enough now that you can avoid PMI. We're doing that probably on half of the loans we do. Okay, so average PMI is probably 150 to 200 bucks. So if you can remove that, there's your $200 savings. Now you drive down those rates and the payments. Let's go over to our website for a second. So if you want to go over to my website, just use this calculator to just kick the tires. Okay, see if this makes sense. And you can use calculators on here too if you're looking to buy a home. Why I'm concentrating on people that are looking to refinance. Applications are up 81%. Everybody that owns a house right now is trying to qualify. I did a survey on our website the other day, and I basically drilled it down why everybody's just sitting on the fence right now. We're like, okay, we're scratching our heads. It's like rates are better than they've been in years, and people are just sitting there. Why? Everybody thinks that rates are going to just keep going down. It's like the stock market. Folks, the stock market doesn't just keep going down. There's going to be a correction soon. Okay, I'm not saying when. I'm not a fear-mongering, but I'm just saying the same thing with mortgage rates. They're not going to keep going down forever. I'm going to have a show tomorrow. Join us for it. I'm going to talk about will rates and when rates are going to get back to 4%. I'll give you historical data and everything. I'm just presenting you the data. You decide what it's like. So here's the resources I want to go over with you guys. Right through here. Calculators used in videos. So go in here and use this one right here. Should I refinance? Here's the cool tool. Just go through here and use right now a rate of 6. Okay. A lot of rates are there right now, believe it or not. So let's go in here and we're going to put in this client. I just want to show you how you can use this tool to first just scrub out and see, does this even make sense? Because if you have a loan, let's say your loan amount's $80,000. If you only have an $80,000 mortgage, you're in good shape. A 1% reduction in rate isn't going to be worth it. Okay, because your costs are going to way exceed that. In most loans, there's not a lot of cost as there is, but the savings on that loan size isn't really there. You can compare things, and here's the tool to do so. So go to the rate update, hit the calculators, and you're going to come right through here. Let's say our average loan right now is about $330,000. Most people are still in the 7% range. I'm going to go 7.5. All right, they took it out probably about a year and a half ago or so. So now they're looking and they owe $328. The average fees, a lot of times, just so you guys know, most of the time when people don't refinance, they're like, okay, the fees are way too much. When I bought my house, I paid like 15 grand in fees. Refinancing in most cases is a fraction of that. Okay. So we're going to go in here and we're going to say, let's go on the high end, 3 grand. Okay. So we're going to put down here, make sure down here you want to include it in the loan. If you want to pay it outside of closing, you can do that. Okay. So that's we're going to look. And this one, we're going to go, I'll go 6%. All right. Just use that number for now. Go up here. They're going to save $323 a month, over $70,000 in interest on the loan, and their break even is less than a year. I'm doing a video. Dave Ramsey, I don't agree with a lot of what he says, but he just came out with a video, when should you refinance? And one of the things he said is, and this kind of floored me, is as long as your break-even point, and I've been going over with break-even point with people, go back to videos that I've had for 10 years, and you can see that. He's saying as long as somebody's break-even point is less than 3 years, it's a good idea to refinance. In the long run, yeah. In today's market, I don't know. I right now, rates are pretty darn low. I don't think they're going to go much, much lower. They're not going to go in the 4% range unless we just go into a massive, massive recession or something. The only way that can happen is if the Federal Reserve comes in and starts buying up the bond market in mortgage bonds. There's no need for it. There's no crash in the market. They know rates are high, but they're not going to jump in and do anything. So as the markets blend out, you're going to see rates probably in the in the high fives range, low sixes for quite some time. So the longer you stay at 6, 7, 8%, the more interest you're going to burn. So this one has a 9-month recapture. Not a bad deal. Okay, so just use this tool to just help you. Does it make sense? And if it's like, okay, that works, that kind of works. Well, let me validate this stuff. Is that really what my rate's going to be? Is that really what my fees are going to be? Well, let's go over to Dan and let's go to his website and let's figure this out. We'll just go up here and let's request an appointment. And that's all you need to do. Or just ask Dan and just let me know. But we need your information. And so that's what you do there. So let's get to some more questions that are out there. We need to get back to my rate sifter. Let's clear this out for a new search. And let's get to it. So what do we have on here? Sorry. We have Ravik, refinance, 15-year, 545 home price, 10% down, 740 score. I need two things, my friend. What is your gross monthly income? And what is your zip code? So what do we got? Okay, so we have refinance. We're going to say it's a rate and term, I'm assuming. Property 545. We're at a 90% loan to value. And you have a 740 credit score. Again, we need the zip code. 60623. I'll just continue to use Chicago. Click out those. What else do we got? I don't know your income, so let me see. But we do want a 15-year. So I'm going to move that over to a 15-year, and let's get a shopping. Or comparing. I hate the word shopping when it comes to this. Right now, you are looking at 4.75. 4.75. Yikes. That's a pretty darn good rate. And then you can see, here's the cool thing about this is, scroll down through here. You're going to see every one of these says wholesale. You don't have access to these. Okay. You might have access to these companies. You're not going to have close to getting these rates. If you go down through here, you're going to see this is the same borrower, folks, the same credit criteria. Then I didn't change anything. You go down through here. Let's assume you called. I'm just going to pick out a company right here. Equity Prime Mortgage, and you gave them their information. They'd say, "Oh yeah, I can give you that 4.75 rate, no problem. Let's get that paperwork started." Then you can find out that it's going to cost you $7,436. And that's happening to a lot of people. So please make sure you check those costs. I just come from a bank, and they were just slamming their clients through with doing this, and nobody ever paid attention to those fees. And a lot of people, put it this way, I wouldn't have advised them to take those loans if I was their financial advisors. That's all I got to say for that part of it. So other than that, let me see what we do have it. So Ravik, let's go back to yours and actually find what you can get. So I'm going to put in your income, 110. So we're going to say $9,000 a month, and 44028. 44028. Lorraine, I just passed there. I was actually in Lorraine visiting my wife's uncle about 3-4 weeks ago. So let's get over to it, my friend, and see what we got. Here's what it is. 4.75 with a $446 credit. So this is what we do behind the scenes. Okay. So how you did it in the past, like I said, is what came to mind was I actually had a client this morning who they called me up, and we were going back and forth. He's like, Dan, I just don't know what to do. And then he said, hey, you know what? I got a neighbor that just got a mortgage, and the rate, I think he said the rates were in the threes. And I'm like, I don't know how he could possibly get that. And so I said, was it a new construction? He's like, yeah. I was like, I know what happened. He had a bunch of lender credits, and so they bought down his rate maybe to qualify for, or if you're building a home, make sure you watch my video, how to use builder credits. I actually got a testimonial in there. It's pretty cool. If you don't use them, you lose them. So that's the problem. So use them all up. And then, if you need some assistance with that, check out one of the videos that I did on how to use the builder credits. So that's where rates are today. I'll be back at the closing bell, folks. But again, the whole goal of this was, I get it. When you're looking at rates, here's where rates are. You're like, okay, does this make sense? Then you're like, oh, well, that rate's different. If you ever go, I don't know who this company is, and avoid that by all means. But I just wanted to show you how, the old times you'd go through here and you'd chase your tail. Now you're going to work with one person on my staff. We're going to walk you through the programs we're getting you qualified for, the whys. We're going to show you all the pricing, walk you through every piece in detail. One of the things that most people like about us is we do a lot of this by video. We want you to see what we see so we can actually piece all this together. So let's answer one more question down here. You guys are so kind to be with me today. And then I'm going to jump off of here because we are slammed today, folks. So let's get over to it. What do we got, my friend? First time home buyer, primary home. Let's see, Neil, let's get a new search for you going. And I am going to get out of this because we don't need all that. I'm actually going to take out a couple others because they have their own side pricing on rates. Okay, so let's see if you were good stored. What do we got here? We have zip code 2828075. We have the zip code. You're in North Carolina, my friend. $750,000 with 20% down. So that would mean you're getting a loan for 80% of the value. You have a 780 credit score. Hey, while we're talking about that, let me give you just one tidbits on credit. So if you go over to these credit systems that I have, creditscoresandmore.com, the highest credit score that used to be on basically our rate sheets, my mic just fell over, used to be 740. If you had a 740 credit score, you were golden. And then a couple of years ago, the administration changed that and divvied out some different buckets. So now you need a 780 credit score. I used to always tell people, don't freak out if your credit scores aren't 800, but just letting you know, new credit score systems, and this has been around for a year or so, is the high tier now in credits is 780. Back in 2006 and that, when people were getting those dumb loans that were 100% financing, you need like a 620 credit score to get 100% financing with no documentation. It was crazy. Okay, so let's get over here, my friend, and let's see what we can help you with. All right, we have a 750, 20% down, 780, 208,075. What is your Anil, my friend? Oh, monthly. I'm sorry, you did put that in there. $12,000 a month. First time home buyer. Okay, we got that. Got that. I'm going to go in here. Standard. That's why we didn't get that affordable. Okay. Any loan officers? None of you loan officers out there caught me on that. This is the way. I'll explain it to you in a bit. Okay, so that filter that I didn't click, that's the filter that pulls that data from your income. Because it was, remember I kept saying, why aren't we getting the home ready, home possible? Well, because I forgot to click those buttons. That's why. So let's get over to this. We got all the data that we need. Click, and let's start comparing. So what do we got here? We have a rate at 5.625, and actually you're getting an $1,800 rebate back on that one. So that's how it works. Okay, so let's go to this. I'm going to go in here. Let's see if this works. So he makes 12,000. Let's say he makes 6,000. Let me show you something. Did we have the right years? Yeah, that was a damn good rate. Hope you guys can hear me. When I turn my head, can you guys hear me? Used to not be able to, but I hope the system does now. 5.5. No. Go through, make sure I have it correct. Filters. Yes. No, but it didn't work on that one. Sometimes it works, sometimes it doesn't. It'll tell you through here if it qualified or not for any of those programs. So that's what you'd be looking at. And then if you need closing costs and things like that, that's what we run through when you schedule a consultation and give us all the information that we need. So let me just run you through what we do. And then if you need any assistance from there, or I'm going to stop taking questions in here in a little bit, but if you have one or two, I'd be more than happy to do that. So here's what you do. If you want to reach out to us, if you're a homeowners, hit the RateWatch 2.0. Let us know what your mortgage information is. I don't sell the data. It'll be me, Alan, or Tony calling you. Basically, we monitor this every day. I think today I had 27 of them, 27 people. So make sure you answer the phone and answer your texts, because what you're going to do is put in your mortgage information and tell me, okay, Dan, when the rate hits X, I don't care what rate you put in there. It could be 1% if you want. It's probably never going to hit, but put in a reasonable rate. And when it hits there, we're going to reach out to you. And here's what we're going to do. We're just going to go over what the new payment would be, what your savings would be, what your cost would be, and the break even. That's what we're going to focus in on. And we're going to help you. Please don't do this. Don't go through all these things. Just join us at therateupdate.com, fill out your information. And again, if you're looking to buy a house, check this out. Here's the benefit of this. And then I'm going to be going. The benefit of this is what's happening right now is people that took out a down payment assistance program, they're not able to refinance now, even if they didn't lose money on their home. Here's why. Let's say you bought a house for, I'll just do simple math, $200,000. Okay. And you put 3% down. That means $6,000. So you got a loan for $194,000. Okay. And then you had a $15,000 down payment assistance loan. So you add 15,000 of that. What do we have? 192.09 now is what we owe. Well, my house isn't worth 209. Well, it didn't go down in value. Well, I had a down payment assistance loan I had to pay off because you have to refinance it in the loan. They won't allow you to keep it open. So it's not allowing a lot of people to refinance. So I've been explaining to people for years, you got to take one of these that don't have a payback. And now people are finding out the why I said it. So that is it. So what you'll do is just put in that information there. If you want to find out more information, here's the last cool thing I want to show you on our website. You go to resources, go to blogs. I'm trying to post in their blogs every day to help you guys out. I have a teaser coming out tomorrow. It'll be out tomorrow morning about where 4% coming back and when. I'll be posted here, and we will be live tomorrow with that. So I appreciate you guys watching. Please subscribe down there. So every time I post a video or do a live event, you get an alert. You don't have to join. If you see the title and you're like, it doesn't sound interesting, don't watch it. But I think you're going to find a lot of videos that really are educational, and that's my goal. So folks, my name is Dan Frio. I am a mortgage loan officer. My slogan is one application, one credit pool. We're going to compare your loan with over 30 different lenders. I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you out. If you're looking to buy or refinance your home, even if you have questions, that's what we're here for. So go to the website. That's where you can find almost everything about us. And that's it for today, folks. So thank you so much for joining us, because without you being here, I'd be just talking to a blank screen. So now you know how that StubHub thing works. They went over there, they bought it through StubHub. So think of Dan as the StubHub of mortgages. So thanks for watching, folks. God bless. Have a fantastic